A lot of the auto stocks are pricing in recession era multiples right now. So it's sort of like SAR of 9 or 10 million, and we're nowhere near there. In fact, most recessions, you'll see stocks that are 25 to 30% discount to the S&P 500. Now we're running closer to 50%. So I think auto dealers, there's a lot of value opportunity there, and we're going to focus.
Not to cut you off, but is it all cyclical? Because we just had John Levin on, who is pounding the table for GM. And talking about big shifts with electric cars and this whole idea that we're not going to need as many cars because we're all going to be doing ride sharing and sort of those issues being reflected in the multiples where we can't just look back and say they're pricing in recession like prior cycles?
Yeah, it's a great point. Look, I think some of it is cyclical for sure. I mean, the fall of car sales, for example, right? And sort of luxury manufacturers squeezing out the midlines and so forth. But a lot of it is secular as well. And I think as we see this movement into electrification and autonomous, it's not going to happen overnight. There's going to be step functions into hybridized vehicles, which are much more complex and drive a lot more maintenance costs, things like that for dealers and so forth. So high ROIC is where we want to be focused, and a great leverage point to that secular tailwind. Cruise automation at GM, as an example, would be a stock to focus on.
So talk to us about some of your picks. I'm going to start with Ferrari because it's the most attractive.
Do you like it the most?
Yeah.
Yeah, I don't blame you. High return on invested capital, and they're going to transition from 9,000 annual units production to call it 13 or 14,000 over the next mid-cycle, so 5 to 7 years. And from a brand perspective, one of the most protected, customer loyal brands in the history of luxury broadly. So again, we're focused on quality there, but also some key EBIT margin expansion, production expansion over the kind of near to medium term.
And you mentioned auto dealers before. It's not one of these picks.
Sure.
You just think overall volumes should hold up better than the market currently?
There's some share shifting going on. Remember, during the last recession, there was a big consolidation of auto dealers, and what they're doing better now, Penske is a great example of this, is pivoting more into used retail. And when you think about what CarMax has done over time, again, high return on invested capital, premium traditionally to the S&P 500, Penske's getting into standalone used sales a lot more force, and we're seeing a pivot from consumers to new to late model used vehicles as the off-lease supply comes back to market. So I think that's one to focus on.
Do you think if the trade issues get solved, that's also a big stimulus for these stocks, or is it very much just the US kind of growth outlook that they're trading on?
I think they're pricing in that it's not going to be solved anytime soon, and so I do think there's some upside there to the degree that we get some incremental sort of line of sight on a resolution, but to me, that's going to linger well into 2019, probably beyond.